Hello students, how are you all? I hope you are doing well. In this video, I am going to explain most important adjustments which you have to refer before going to your exams. Most of the students might get some doubts while solving the problems regarding these adjustments. Now, do remember one thing, these adjustments you get as a part of the problem. Most of the times you get these adjustments as part of the problem. Look at the first adjustment. First one is accounting for GST. Out of that, so which adjustment we get from this accounting for GST? That is utilization of input tax credit under GST. Here we have to pay output GST, that may be IGST, CGST or SGST. So when you are making payment of output GST, here we can utilize the input GST, input tax credit, ITC. So in that the adjustment is. So here I have given reference of study material, students. You go and refer this illustration 10. So you better to open study material illustration 10, page number 7.47. And this adjustment you get in final accounts of sole proprietorship. Preparation of final accounts of sole proprietorship. To get students. To get illustration 10. Here they have given in the trial balance. Here they have given in the trial balance input CGST, input SGST, output CGST, output SGST, and output IGST. Here, what are the GST provisions? What are the GST provisions? Here I have given some brief explanation to the concept. Look at it. First, output tax means what? The GST charged on the supply of goods or services made by supplier. Suppose if I am a supplier of goods or services, I will charge some extra amount from the customer, that is nothing but output tax, output GST. Next one, what is input tax? Means the credit of input tax already paid. See, as a supplier, I will sell the goods. At the same time, to sell the goods, I have to purchase it now. So when I am purchasing goods, I will pay some tax on the purchase of goods or services. That is called input tax. Now, finally, we have to pay tax to the government. Output tax means tax payable to the government because it is collected from customers now. So, at the time of making payment of output tax, you can adjust the input tax. So, those provisions now we see. To get utilization of input tax credit under GST. Observe carefully. First, input IGST. We talk about input IGST. So, first adjust this input IGST against output IGST. Simple. Remaining amount. Suppose if you left some amount in input IGST, then it can be utilized for adjusting CGST or SGST. Yes or no, students? Next one. Input CGST. This is first adjusted against output CGST. Output CGST. If you left any amount in the input CGST, that can be adjusted against output IGST. So, what is the important point here? Input CGST is not adjusted against SGST. Yes or no? One. Input SGST. First adjust against output SGST. If any amount left in the input SGST account, that can be adjusted against output IGST. Here, what is the important point? Input SGST will not be utilized against output CGST. Yes or no, students? Yes. These are the set of provisions. Now look at the problem. Look at the problem. See this table. If you get this type of problem, then it is better to prepare this type of table. First one, output tax liability, header, tax payable. These are the tax payable. Tax payable. Here, how much input tax credit we have? Input tax credit we have CGST, SGST, but we don't have any IGST input. Now, first look at CGST. First we set off CGST. How much is liability of CGST payable? 8,000. 8,000 is my liability. I have input 10,000. First, out of 10,000, 8,000 I will adjust against CGST. What's the balance left? 2000 rupees. This I can adjust against output IGST. So I'm adjusting 2000 against output IGST. Next one, I have to pay SGST 8000 rupees. But how much input I have? 10,000 rupees. Right. So out of 10,000, first I will adjust 8,000 against GST. Remaining how much balance left? 2000. Na? That 2000 we adjust against IGST. Now finally tell me total IGST payable 6,000. Out of them already adjusted against CGST and SGST and remaining balance payable 2000 rupees. Finally, this much of amount we have to pay to the government. Here you can assume two things. One is 2000 rupees paid, is 2000 rupees not paid. If you assume this 2000 rupees is paid, then on the other hand, the cash balance will get reduced or cash at bank will get reduced. Suppose if you assume that it is not paid, if you assume that it is not paid, then this is shown as a liability on the liability side of balance sheet. Is it clear, students? So in the examination, you clearly mention your assumption. This is regarding GST. Now come to next adjustment, that is depreciation chapter, students. Depreciation and amortization chapter. Which type of adjustment most of the students will get some doubt, that is provision for depreciation method and asset disposal account. To understand this concept, so go to study material illustration 8, page number 5.19. First try to understand, students, the concept here. Okay. Generally, when you purchase asset, what is the entry we record? Asset account debit to cash or bank or vendor account. Now, at the end of the year, we provide depreciation on that. What is the entry we record? Depreciation account debit to depreciation account debit to asset account. But while crediting asset account, what is happening here? Asset account balance gets decreases. If the organization wants to show the asset at its original cost, historical cost, then they will follow this provision for depreciation method. What is the objective of providing or maintaining depreciation under provision for depreciation method? Means the asset account is shown in the balance sheet at its original cost. Is it clear? And the accumulated depreciation, because over a period of time we provide a depreciation on the asset. So the accumulated depreciation amount we show separately in a account. That is nothing but provision for depreciation. Observe carefully. So here we open provision for depreciation account or accumulated depreciation account to students. Observe carefully. Now, what is the entry? First, for providing depreciation, generally what is the entry we record? Depreciation account to debit to asset account. But now we record in the place of asset, we credit provision for a depreciation account or accumulated depreciation account. By writing this entry, we show in the balance sheet asset at its original cost and the accumulated depreciation on the asset on the opposite side, liability side, provision for depreciation or accumulated depreciation. Or as a presentation from the asset cost, we deduct provision for depreciation. That is the accounting treatment. Next, for closing depreciation account, as usual, profit and loss account to debit to depreciation account. Now, in the balance sheet, what is our presentation? Tell me. Here, asset we show at its original cost. Let us take imaginary amounts 10 lakhs, 10 lakhs, and on the other hand, we show provision for depreciation. Let us say 1 lakh. Let us say 1 lakh. Observe, students. This 10 lakhs and this is 1 lakh. Or else you can show in different manner. From asset, you deduct provision 1 lakh. Net amount we show 9 lakh in the outer column. This is how we present in the balance sheet. Now, the next concept. So, every year we follow the same procedure. Every year we follow the same procedure. At the time of sale of the asset, at the time of sale of the asset, whatever the depreciation we provided on the asset, that is transferred to the asset account to calculate profit or loss on sale of asset. Cool. So for that, what is the entry we record? Generally, provision for depreciation account shows credit balance. Now we are transferring. Entry provision for depreciation account debit to asset account. To asset account. Here, asset value gets decreased. The provision for depreciation amount. Now the asset account shows. See, asset cost how much? 10 lakhs. Till now, how much depreciation provided? Let us say for 1 year we provided depreciation 1 lakh. Now tell me what is the book value of asset? 9 lakh. Book value of asset is 9 lakh. Yes. Now this book value of asset, for how much you sold? Let us say for 8 lakhs we sold the asset. Now profit or loss? Loss of 1 lakh transfer to P&L account. Over. There is a thin line of difference. There is a thin line of difference between provision for depreciation method account is maintained and when provision for depreciation account is not maintained. So be careful, students. Next one, asset disposal account. Most of the students they get some confusion here also. See, I am taking just for example, suppose this is asset account. Yeah, this is asset account. Okay. Earlier, here it is cost of asset. Here it is cost of asset. Here I have written depreciation. Yes or no, students? Yes. Suppose if part of asset, it is let us say assume this is one single asset. Suppose if you assume there are multiple asset accounts. Suppose this is plant and machinery. Plant and machinery account. Plant and machinery account. Plant and machinery account. This plant and machinery account contains various plants or various machineries. Yes or no, students? Out of them, if you sell one asset, out of that, if you sell one asset, then what is the accounting? Normally, what we do, whatever the depreciation we calculated till now, that is transferred to the credit side and sale value. After that, we calculate profit or loss separately. Instead of doing the calculation in plant and machinery account, instead of doing this calculation in the plant and machinery account, what we do, we are preparing a separate account. We are preparing a separate account to know the profit or loss on sale of asset. That is asset disposal account. Asset disposal account. Suppose out of 1 crore, we sold 2 lakhs worth of, sorry, we have sold 20 lakhs worth of asset. 20 lakhs worth of asset. First, from the plant and machinery account, you deduct that 20 lakhs. You deduct the 20 lakhs. Now, plant and machinery account shows 80 lakh worth of asset. 80 lakh worth of asset. This 20 lakhs is sold now. Okay. Now, this 20 lakhs we bring the asset disposal account like this. So carefully. And whatever the depreciation we provided on this asset, we take it to the asset disposal account credit side. Let us say 5 lakhs is the depreciation. 5 lakhs is the depreciation. Now, what is the book value of asset? 20 lakhs cost, 5 lakhs depreciation provided till now. 15 lakh is the book value of asset. Now, this asset we sold for 10 lakhs. And what is the profit, students? Or loss? 5 lakhs is the loss. 5 lakh is the loss. Observe carefully. This account is closed. Here, ultimately, what is the objective of preparing asset disposal account? Without disturbing the plant and machinery account, because this account contains various plants, various machineries. Okay, without disturbing this account, we are calculating the profit or loss on sale of only one machinery or that particular machinery. That's the purpose of maintaining asset disposal account. Whatever the accounting treatment we have did here, the same is provided here. Observe students. First one, what we have to do, transfer the cost of asset, transfer cost of asset sold to disposal account. Entry, asset disposal account debit to asset account. Next one, transfer of provision for depreciation on assets sold. Entry, provision account shows credit balance now, so provision for depreciation account debit to asset account. Sale of asset, this we know, bank account debit to asset disposal account. Bank account debit to asset disposal account. After that, profit or loss on sale of asset. If it is profit, simple, asset disposal account debit to P&L account. If it is loss, profit and loss account debit to asset. That's it. Is it clear, students? Look at over. Yeah. Now look at one small example. Look at in this problem, they said it is a cost of asset. It is a cost of asset 12 lakhs. We provided depreciation at 10% per annum. Normally, what is the entry we record at the time of purchase? Bank asset account debit to bank account 12 lakhs. Which method they are following? WDV method. For depreciation, normally what is the entry? Depreciation account debit to machinery. But now we are following provision for depreciation account. Entry, provision for depreciation account debit by depreciation. Sorry, depreciation account debit to provision for depreciation account. Yes or no? Like this we maintain here. Now, here machinery disposal account. Here they said a part of the machinery purchased on April 1st, 2019 for 80,000 was sold for 45,000. What is the cost of machinery sold? 80,000. First, transfer this 80,000 to asset disposal account. Entry. Asset disposal account debit to machinery account. So, machinery account credit side. Yeah, 80,000 rupees to machinery disposal, not machinery disposal, to machinery account. On this, originally, how much depreciation we provided? You just calculate the depreciation provided from 1st April 2019 to 1st October 2021. Till this date, whatever the depreciation you provided on this asset, transfer to provision account. From provision, you transfer to machinery disposal. Observe, 80,000 cost, 18,440 provision for depreciation. Difference amount is nothing but book value. How much is the book value? Tell me, students. 80,000 minus 18,440. So 61,560. This is the book value of asset, but we sold for 45,000. So remaining 16,560 is loss transferred to P&L account. Through this account. Is it clear? So you go through the problem once, then you can understand. The next adjustment is bills of exchange, students. The next adjustment is bills of exchange. In entire bills of exchange, we can classify bills into two parts, not trade bills and accommodation bill. So we are discussing about accommodation bill, especially sharing of second bill discount. First bill discount anybody can calculate. Why? Because in the first bill they mention this much of amount is sent to second party. But second bill they will not mention the amount. Amount sent they will mention, but how the amount is shared between these two parties they will not mention. So that how we calculate. For that, you go to illustration 10, page number 6.24, students. Okay, look at. Yeah, illustration 10. Just a minute. Illustration 10. Look at. X draws on Y. X draws on Y a bill of exchange for 30,000 on 1st April 2022. for 3 months. Y accepts the bill and sends it to X, who gets discounted for 28,800. Here, what is the discount amount? 1200 rupees is the discount amount. X immediately remits 9600 to Y on the due date. Here, observe, out of the proceeds, he sent 9600 means how much percentage he sent? One third. One third amount he has sent. Yes or no? Observe carefully. 28,800 divided by 3, that is nothing but 9,600. One third of the amount sent by X to Y. Means this discount also shared between X and Y, one third, two third, one third, two third, 900, 800, 400. Yes or no, students? 800, 400. This we can easily calculate. Then what about the second bill? Observe. X being unable to remit the amount due accepts a bill for 42,000 for 3 months and which is discounted by Y 40,110. Here what is the discount amount? 42,000 minus 40,110. 1890 is the discount amount. The second bill is 42,000. Second bill is 42,000. Out of that, how much amount received? 40,110. And what is the discount amount? 1,890. Yes or no? Now, this discount is shared between X and Y. That depends on how the 40,110 is shared by X and Y or utilized by X and Y. Yes or no, students? Yes. Now, observe. Now, we have to first calculate how this 40,110 is utilized by X and Y. Always calculate from first party point of view. From first party point of view. Observe carefully. Out of first bill, out of first bill, out of first bill, how much amount utilized by X? 30,000 into 2 by 3. 20,000 rupees is utilized by X. 20,000 is utilized by X. Means after discounting the second bill, first Y will honor the first bill. Na? That means X has utilized 20,000 rupees indirectly. X has utilized 20,000 rupees indirectly. Yes or no, student? Next, out of the second bill proceeds, Y sent 6,740 to X na directly. 20,000 indirectly utilized because of first bill. First bill amount he has to actually remit, but he didn't. Now, second bill directly utilized 6,740. So tell me total how much amount utilized? 26,740. That's it. Over. Now, for 40,000 rupees 110, for 40,000 110, discount amount is how much? 1890. Then for 26,740, how much is the discount? Borne by X. Calculate cross multiplication. 1,890 into 26,740 divided by 40,110 to 26,740 by 40,110. So 1260. Out of 1890, 1260 borne by X and remaining amount 630 borne by Y. That's it. Over. Is it clear, students? This is how we calculate second bill discount, share of two parties. I hope you understood this. Next concept. Next adjustment. So this chapter is preparation of final accounts of sole proprietor, important adjustment, provision for bad debts and discount on debtors. Provision for bad debts and provision for discount on debtors. For that, you just open your study material and illustration 4, page number 7.27. Page number 7.27. Now, look at this provision for doubtful debts, students. Before this, let me discuss about provision, why we need provision for bad and doubtful debts. Generally, it is called provision for doubtful debts. Now, look at the end of the year, at the end of the year, we have to check out of the debtors, any debtors became bad debts and remaining debtors debtors as per trial balance minus any further bad debts, any further bad debts after preparation of trial balance we have to deduct. So we get debtors, remaining debtors, remaining debtors. Yes or no? Now out of them, we need to identify any doubtful debts you have. Out of these debtors, do you have any doubtful debts? Yes, sir. Then tell me how much. So generally, these doubtful debts are expressed as a percentage. Some 2% debtors are doubtful, sir. Some 5% debtors are doubtful, sir. Generally, they will express like this. Yes or no, students? Or in the examination problems, they directly can express as amount, doubtful amount. When you have, see, debtors doubtful means bad debts is loss. Now, doubtful debts, not loss. So next year, suppose if you are unable to collect any amount from debtors, then this becomes loss for us. As per concept of prudence or conservatism, we create provision for future losses. Yes or no, students? Yes. That too, these debtors consist of current year debtors. Current year debtors. These debtors we are going to collect in the next financial year. Current year debtors, and relating to these debtors, already we have shown income in the trading account credit side. Already we have shown income in the trading account credit side now. So to follow matching concept also we do the same. Yes or no, students? Now when in the problem, if they say depreciation, that sorry, provision for doubtful debts expressed as a percentage, then what is the entry we have to record? And if they given directly amount, if they have given directly amount na, it is easy. They express as a percentage na, then we have to calculate. Finally, what is the entry for provision for doubtful debts we have to write? Simple. Profit and loss account debit to provision for bad and doubtful debts. Do remember, students? We are just creating provision for doubtful debts. It is not actual deduction from debtors. It is not actual deduction from debtors, students. Do remember. Okay. Now look at one example. Try to understand provision for doubtful debts, and the provision for discount on debtors is similar to this. Similar to this. Look at. On 1st April 2021, provision for doubtful debts existed at 40,000. Existed at 40,000 means this is calculated in the previous year. Now, when you get this type of opening balance, immediately open the provision for doubtful debts account, write down on the credit side. Because provision for doubtful debts account shows credit balance now. Next one. Trade receivables on 31st March 2021 were 15 lakh. Bad debts totaled 1 lakh. It is required to write off the bad debts and create provision equal to 5% of the trade receivable balances. Observe carefully what is your debtors 15 lakhs. How much is bad debts totaled we have 1 lakh rupee. Now observe. First calculate like this. In the current year, tell me first 15 lakh is your debtors minus how much bad debts 1 lakh. What is the remaining amount of debtors here? 14 lakhs. 14 lakhs. On these 14 lakhs, we create provision. How much? 5%. To remember, provision is always created debtors at the end of the year after deducting further bad debts. After deducting further bad debts. This is, you have to remember. Now, 14 lakhs into 5%, 70,000. 70,000 towards provision and 1 lakh is bad debt. Total amount to be transferred to profit and loss account 1 lakh 70. To calculate like this, simple. Current year provision 5% less bad debts 1 lakh. Total amount generally you have to transfer to the P&L account 1 lakh 70. But how much provision already you are maintaining? 40,000. Means remaining amount we transfer to the profit and loss account 1 lakh 30. For this, what is the entry we record? Profit and loss account debit to provision account. This is the entry posting by profit and loss account 1 lakh 30. Now, when you are maintaining provision for doubtful debts, generally bad debts are bad debts are transferred to profit and loss account. But here we are maintaining provision for doubtful debts now. So this 1 lakh is transferred to the provision account. For this, what is the entry we record? Provision for doubtful debts account to debit to bad debts account. So provision account to debit side to bad debts. Now the remaining balance is nothing but closing balance. How do we present in the balance sheet? Simple, students, observe. In the balance sheet, assets side, debtor balance 14 lakhs minus provision 70,000, remaining 13 lakh 30,000. This is how we present in the balance sheet. Is it clear, students? Yes. Now look at the same methodology or the same process is for provision for discount on debtors. Okay? Then just have a look. But here, when you get provision for bad debts and provision for doubtful debts in the exam, then it is better to prepare a simple statement, so student. Simple statement. What is that statement? Observe. Trade receivable given as per trial balance. From this you deduct further bad debts. From this you deduct further bad debts and also deduct further discount allowed. Further discount allowed. You get some amount here. On this you can calculate provision. Next, deduct provision for doubtful debts. We get some amount now. On this, you calculate provision for discount on debtors. Provision for discount on debtors. Here, yes. Finally, whatever the amount you get, show it in the balance sheet by showing debtors in the bracket, simply working note over. Observe carefully. So when you get provision for doubtful debts plus provision for discount on debtors, then it is better to prepare this statement. Along with this statement, you should prepare provision for bad debts account also. Provision for doubtful debts account also. This is regarding provision for doubtful debts. Next one. NPO. Very, very important, student. NPO. Can write 7, 8, 9. NPO. In NPO, the most important adjustment is subscription received. So for this, we have to prepare subscription account. See illustration 7, page number 10.147. 10.147, illustration 3. Here, suppose, oh yeah, this is salaries now. So I'll discuss about subscription. At illustration 2. Illustration 3 for expense. Illustration 2 for income. Right. During 2022, subscription received in cash 42,000. What is the entry we record? Subscription account, sorry, cash account debit to subscription account. So in the subscription account, credit side by cash 42,000. Next one. It includes 1600 for 2021. Means in the year 2021, we have to receive 1600 rupees. For that year, what is the adjustment entry you have been passed? The adjustment entry is subscription receivable account debit to subscription account. Same entry, whatever the closing entry you have been recorded for the year 2021, the same will be reversed in the year 2022. Means what is the reversal entry? Subscription account debit to subscription receivable account. For that, what is the posting, student? Subscription account debit to subscription, not this, to subscription, yeah, outstanding. Yes, this one 1600, 2021 outstanding. Next one, and 600 for 2023 means it is relating to the next year. What is the entry we record for this entry or adjusting entry? Subscription account debit to subscription received in advance. So the same we post into subscription account by subscription. Sorry, to subscription received in advance 600. Is it clear, students? Next one. Also 3000 has still to be received for 2022. This is outstanding for the year 2022. For this, what is the entry we record in 2022? Subscription receivable or subscription outstanding account debit to subscription account posting by subscription outstanding 3000. By subscription outstanding 3000. Observe carefully. Is it clear, students? Now balance this account. That balance is transferred to command expenditure account. Sometimes, so here the question is how much amount we transfer to income and expenditure account? How much amount we transfer? Only the amount which is relating to current year 2022 only we show in the income and expenditure account. Remaining we will ignore simply. Sometimes the same question may be asked reverse. Means here they give you 42,800. They give you 42,800. That means amount credited to income and expenditure account 42,800. They will ask how much cash we received towards subscription during the year 2022. For that, what is your answer? 42,000. To get 42,000, you have to do certain adjustment. And the same account you have to prepare. Same account can also be prepared in a statement format. Same account you can also be prepared in a statement format. What is that, sir? Simple. 42,000 amount received, still receivable for current year 3,000. So 45,000. Out of this, what is relating to previous year? Previous year amount we have to ignore na 1600. And what is relating to next year? 600. Finally, how much amount you get? 42,800. This is shown in the income and expenditure. Yes or no, students? Same methodology is followed for expense also. This is income na. For expense, all becomes reverse. So follow that. Next one. Next important adjustment in retirement and death student regarding joint life policy. In retirement, joint life policy. In the death, both joint life policy and share of profit, calculation of share of profit. Two adjustments are very, very important. Now look at retirement of partner, study material illustration 7, page number 10.147. 10.147. Observe, students. 10.147. Normally, here, first try to understand the concept of life insurance policy or life policies. Generally, the partners will take life insurance policy on the lives of partners. That may be jointly, then it is called joint life policy, or that may be separately, separate life policies. Whatever it may be. Now the premium is paid. The premium on life insurance policy is paid by the firm. Partners will not pay out of their pocket. Who will pay? Firm will pay. Now, when the firm pays any amount, then that should be shown in the books of accounts. Now, the question comes, how do we treat this insurance premium? How do we treat this insurance premium in the books of accounts? For that, we have three methods now. First method is what? Insurance premium paid is treated as expense. First method. By treating expense, we transfer it to the P&L account at the end of the year. First, at the time of making payment, joint life policy insurance premium account debit to bank account. Now, this premium paid is treated as expense, na, that is closed. So, profit and loss account debit to premium account. On maturity, what we do? Generally, at the time of retirement, we surrender the policy and we get surrender value. But at the time of death, what happens? We receive total amount. At the time of death, we receive total amount, but at the time of retirement, we get surrender value. So now look at what is the entry we record. Insurance company or bank account debit to partners capital account. Whatever the amount we receive from insurance company, that is distributed to partners in their old profit sharing ratio. Suppose if surrender value is treated as an asset, surrender value is treated as an asset. You may ask, sir, how can we identify which method they are following? We have three methods now. First one, expense method. Second one, that means premium method. Second one, surrender value method. Third one, creation of joint life policy reserve. That means maintaining JLP along with the JLP reserve. First, observe the balance sheet. Observe the balance sheet. The balance sheet will not contain any JLP. There is no concept of JLP in the balance sheet. But in the adjustment, they have given JLP. That means they are following first method. Second, look at the balance sheet again. In the balance sheet, if you have the word JLP, let us say 1000 rupees. What is the meaning of this? They are maintaining JLP account at surrender value. Means they are following second method. In this case, when partner retires, what amount they get? Surrender value. JLP account also is at what amount? Surrender value. This account is showing 1000 rupees balance, and we also received 1000 rupees balance. There is no balance in the JLP account now. Yes or no, students? There is no balance in the JLP account now. When there is no balance, how can you distribute anything to the partners? So, nothing. Nothing. That's it. When JLP reserve method means here JLP reserve we are maintaining. Means whatever the balance in JLP we have, the same amount we also maintain in the reserve. Now what we have to do? When a partner retires, JLP account contains 1000 rupees balance. We also receive 1000. So there is no balance in JLP to distribute any amount to the partners. When there is no JLP, then what is the purpose of maintaining JLP reserve? So that whatever the balance we have in the JLP reserve, distribute it to the partners. This is a simple adjustment, students, because now we don't have much time to discuss in detail. Next one. Next, in case of death, two adjustments: joint life policy, share of profit. The difference between retirement and death is, in case of retirement, we get only surrender value, but in case of death, we get full amount. Now, you can substitute simply the surrender value with policy amount. Surrender value with policy amount. So, whatever the amount we get on the death of a partner, that amount we distribute to the partners. Simply, in the first method, we get, suppose, 10,000 rupees is the policy amount. 10,000 rupees is the policy amount. We get 10,000. First method, distribute total 10,000 rupees. Second method, we open JLP account first. Suppose JLP account is showing 2,000 rupees balance, but we received 10,000. What is the difference we have here? 8,000 rupees. Distribute 8,000 rupees. Third method, JLP we are maintaining, so 2000. On the other hand, we have JLP reserve also 2000. Now, how much amount we received? 10,000. What is the balance in JLP? 8,000. Distribute to all partners in their profit sharing ratio. Now, there is no JLP, so sorry, reserve credit balance. There is no JLP. So, distribute this 2000 reserve also to the partners in their profit sharing ratio. Over. That's clear, students. Next adjustment, share of profit. Share of profit. So, in case of death of a partner, so the death is uncertain. Yes or no? During the year, let us say 2023-24 financial year. During this year, the partner died on 31st October. I have taken exact date. 31st October 2023, Mr. A. Let us say there are three partners A, B, C. Mr. A died on 31st October. Now, from 1st April to 31st October, the period is 7 months. 7 months. 7 months. For this 7 months, we have to give share of profit to the partner. Share of profit to the partner. To distribute this share, we have some methods. One, first of all, for this time period, it is difficult to ascertain. It is difficult to ascertain to prepare financial statements. Generally, financial statements are prepared only at the end of the year. But here, till 31st December, it is not possible to prepare financial statements. But we have to give share of profit to the partner from 1st April to 31st October. Here there are two methods, students. First, in the problem they give you the deceased partner or legal representatives or executors of deceased partner account is settled on 31st October. In that case, there is one treatment. Suppose the partnership deed contains these provisions like this. During the year, whenever the partner died, irrespective of date of death, during the year, irrespective of date of death, settle the executors of deceased partner account only at the end of the year. That means 31st March 2024. This case, one type of calculation. Generally, most of the cases we get in the exam, this. That means, as on the date of death, we settle the executor's account. What we do? Simple. For this, we take the previous year profit as base. Previous year profit as base. I will show you one example, then you can understand. So, you just go to page number 10.178. Page number 10.178. Yeah. Here observe. Profit for the, just a minute. First read the problem, then you can understand. The following was balance sheet of XYZ, profit sharing ratio 1 is to 1 is to 1. The Z died on 31st December 2022. What is the opening date of books of accounts? 1st April 2022. He died on 31st December 2022. How many months he is alive in the business? For 9 months. Now, whatever the profit earned by business during these 9 months, we have to give share to the executors of Z. For that, what is the calculation? Observe. Profit for the period from 1/4/2022 to 31st 2022 shall be ascertained proportionately on the basis of average profits and losses of the preceding 3 years. Here they are following preceding years profits, students. Preceding years profits. In some problems they give you time basis or proportionate basis. Time basis or proportionate basis. Yeah, here it is. Time basis or proportionate basis. To get, suppose the total profit of previous year. So we take first previous year profit directly. This 2,22,500 to, sorry, 2,25,000. This is for how many months? 12 months. But we need for how many months? For example, 9 months. 225 into 9 by 12. So 1 lakh. Here they have given na. Okay. Same amounts we take here. Observe. 2,25,000 and partner dies 3 months after the close of the previous year. Now this profit is for 12 months. The partner is alive for 3 months. So 225 to 3 by 12. How much is the total profit of business? 56,000. Yeah, here you look at, here their mistake. It is 1,25,000, not 2,25,000. That's what I'm saying. 1,25,000. Look at, out of 1,25,000, what is for how many months profit we have to calculate? 3 months. That is 31,250. This is not the share of deceased partner. This is total profit of the firm. Out of that, what is his share? 2 by 10. So that is 6,250. We give it to the partner, executors of deceased partner. For this, what is the entry we record? Profit and loss suspense account debit to deceased partner capital account. Another method we have turnover or sales basis. Here what we do, we first take previous year sales less previous year profit, so that we can calculate the profit percentage. That profit percentage is applied on the sales turnover during the period of deceased partner. That is his share of profit. Yes or no, students? Observe here. Arun, Tarun and Neha are partners sharing profits in the ratio 3 is to 2 is to 1. Neha dies on 31st May 2022. 21-22 sales 4 lakhs and profit is 60,000. You can simply calculate percentage. 60,000 divided by 4 lakhs. So it comes around 15%. Now we see during the period of deceased partner, So on that we take the turnover into 15%. Turnover into 15%. Get here. Okay, 60,000. If the sales are 1 lakh during the period, what is the sales? 1 lakh. So 1 lakh into 15%, 15,000 is our profit. Out of this, what is the share of deceased partner? You calculate. Cool, students. Yes, this is the adjustment. Next, look at. Next important adjustment is issue, forfeiture, and reissue of shares concept. Out of that, first one, how to treat oversubscription amount. Suppose I have issued 1 lakh shares but received for 1 lakh 25,000 shares. How to treat this oversubscription? Next one, forfeiture and reissue of shares. For that, you just open 11.45 page, students. Look at here. We have issued shares for 1 lakh shares. We have issued applications for 1 lakh shares. But whereas we received applications for, yeah, here you can observe 3 lakh 55,000. Actually, we issued only 1 lakh shares but received applications for 3 lakh 55,000 shares. How to deal this situation? Look at first. Observe how many these applications. First, observe in how these applications are categorized. So here they categorized into three categories: 1, 2, 3. First category, 5,000 applications. They are dividing applications: 5,000, 30,000, and 3,20,000. For these applications, how they are allotting shares? Full. For 5,000 shares, they have allotted full. For 30,000 shares, they allotted one share for every two applied. That means 1 by 2. Means 15,000 shares. Remaining 3,20,000, they allotted one for every 4. So 1 by 4, remaining 80,000. So here it is not possible to us for allotting total number of shares. No. How many shares we have issued? 1 lakh. So we allot only 1 lakh shares. Now look at. This is the table you have to prepare, students. Very, very important table. First category, next one, number of shares applied. So how many shares applied by each category people? Next one, how many shares we allotted to them? So how much of application money received? Actually, how much amount you have to receive? What is the excess amount? So here you can calculate one more column, excess amount. Excess amount is nothing but 10,000 10,000 minus 10,000. 60,000 minus 30,000. What is the excess amount we have? 30,000. 640 minus 160. How much excess amount you have? 4 lakh 80. This is one more column. And how this excess amount is adjusted? In the problem they say after adjusting allotment amount, you can refund remaining amount. Or sometimes they may say after adjusting the allotment amount, remaining amount to transfer to the further calls. In that case, the extra amount even after adjusting the allotment, we transfer to calls in advance. Is it clear, students? Yes. This is how you have to prepare a table. Next concept, forfeiture of shares. Next concept, forfeiture of shares. Forfeiture and reissue of shares. In case of forfeiture and reissue of shares, what is the care we have to take? What is the care we have to take? First, forfeiture. For forfeiture, we have to write the entry. What is the entry we write? Share capital account debit. Equity share capital or preference share capital, whatever it may be, account debit. So, what is the amount we write? Here I will show you some example, then you can understand. Forfeiture. Yes. So, this is the entry we record. Share capital account. See, remembering entry is easy, but writing amounts are difficult. So, share capital account debit to your number of shares forfeited into called up value per share. Suppose if the shares are fully called up, then take the face value. Generally, face value is 10. Suppose if the shares are forfeited before final call, means we have to take till the first call, whatever the amount called up. Okay. 2. In this place, directly you can write calls in arrears account. Calls in arrears means this is the capital amount actually the shareholder should pay, but how much amount he has not paid, that is the amount calls in arrears, and how much amount he has paid forfeited shares. Transfer the amount paid by shareholder to the separate account called forfeited shares account. Okay, difference amount. After that, reissue. After that, reissue. What is the reissue entry? Reissue may be at Reissue may be at par or at premium or at discount. If you reissue the shares at par or premium, then there is no loss for us. If the shares are reissued at a discount, then it becomes some loss for us. This loss we adjust against the forfeited shares account balance. After adjusting the loss against forfeited shares account balance, the remaining balance can be transferred to the capital reserve account. For that, what is the entry? Forfeited shares account debit to capital reserve account. Forfeited shares account debit to capital reserve account. Yeah, reissue. Right? First one, bank account debit, forfeited shares account debit to set off loss to share capital. And the remaining amount, remaining balance in the forfeited shares account we transfer to capital reserve. Is it clear, students? This is the one more important adjustment. Next one, redemption of debentures. Here, some students they get a doubt in DRR, creation of DRR and creation of DRRI. For that, look at illustration 3, page number 8.9. Right? This is not actually 8.9, students. Okay, just a minute. Yes. Look at page number 11.193, illustration 2, students. First, DRR is created 10% on outstanding balance in debenture account, students. So first look at the debenture account. See the credit balance, how much balance we have in the debenture account. On that, try to maintain every time 10% DRR, debenture redemption reserve. Sir, when it is created, DRR can be created at any time, but before the redemption. So this condition you have to see. Next one, DRRI. When it comes to DRRI, how much amount we have to invest in the investments specified by Companies Act. So 15% of amount to be redeemed. Amount to be redeemed means, see, sometimes when the debentures are redeemed in installments now, then outstanding balance and amount to be redeemed both are not same. But when debentures are redeemed after a certain period of time, then the balance in the outstanding balance and amount to be redeemed both are same. Yes or no, students? That's why follow these provisions. Is it clear? So you can just have a look into this adjustment. Example. Next one, redemption of preference shares. Redemption of preference shares. Here also most of the students will get a doubt on, sir, at the time of calculation of number of shares to be issued, will I take face value or including premium value? For that, first you check, students, are you calculating the number of shares for arranging the funds or for replacing the capital? So when the preference shares are redeemed, first we have to replace the capital now. Are you calculating the number of shares to be issued for replacing the capital or for arranging the amount? Here we have to see both the provision. For arranging the amount, you need cash now. Yes. So to redeem, we need cash. Check. For redemption, capital replacement, first condition. Second, you should have cash also. When it comes to both conditions now, then how do we solve a problem? Get replacement of capital and arranging cash for redemption. You get page number 11.158. 11.158. Observe. Yes. Hinduja Company Limited had 5,008% redeemable preference shares of 100 each fully paid up. The company decided to redeem these preference shares at par by the issue of sufficient number of equity shares of 10 each fully paid at par. You are required here capital replacement may be out of fresh issue of shares. You can replace the capital by issuing fresh shares or by transferring divisible profits to CRR. By transferring divisible profits to CRR, you have to do either one. or you may do combination. For some amount you can issue fresh shares, for some amount you can transfer divisible profits to CRR. Here what they are doing, they are issuing full shares. So how many shares here I have to issue? First, calculate the face value of redeemable preference shares. 5,000 shares into 100, 5 lakhs. Here there is no information regarding cash. Here there is no information regarding cash. So that here we have sufficient cash, and we are issuing shares now, so that we receive amount. So 5 lakh rupees divided by face value 10. So how many equity shares we have to issue? 50,000 equity shares we have to issue. By issuing 50,000 equity shares, we are able to replace the capital. Replacement of capital is always at face value, students. It's always at face value. This is how you have to calculate replacement of capital. Suppose if the redemption is out of profits, then what is the how CRR is created? That is a question mark. Look at the this concept. Look at calculation of minimum fresh issue of shares. Observe carefully. In this example, okay, I will show you one problem. Yeah. Look at this problem once. In this problem, we have cash balance 31,000. Okay, and in this problem, they are giving the information regarding how do we arrange funds. In this problem, they are giving information regarding how do we arrange funds for redemption. In that case, first we have to check the cash. Observe, in this case, they have given one working note. Observe, students, very carefully. First, what is the amount to be paid to preference shareholders? 65,000 plus 10% premium. You just go to the problem. Total 71,500 we have to pay. But how much of cash balance you have? Look at. Now we need to arrange 71,500 rupees amount. Out of 71,500, we have to replace capital 60,000. Yes or no? Sorry, 65,000 capital we have to replace. But cash, how much we need? 71,500. For that, what we are doing? First, we are selling investments. So by selling total 71,500 we need. By selling investments, how much amount we are able to generate? 71,500 minus 15. Still we need how much amount? 56,500. Still we need. What we have to do to get this amount? Next, what they are saying, to finance part of redemption from company funds subject to leaving a bank balance of 12,000. So total we have in the bank 31,000 now. Leave 12,000 in the bank itself. So remaining utilize 19,000 rupees minus 1,005. So remaining amount we need 37,500. Whatever you do, you generate 37,500 rupees funds. For that, what we are doing? To issue minimum equity shares of 50, face value 50, but issued there to raise the balance of funds. Now look at 37,500 rupees amount we need for this. For this, how much? What is the issue price of share? You are issuing shares now. What is the issue price? Here it is given 50, students. Suppose if it is given like this, 50 rupees face value, but issued at 60. Issued at 60. So which price we should take? Face value or issue price? Issue price. Because here what you are seeing amount. You are seeing amount. So 37,000 divided by, here it is 50. But if I write same, 37,500 divided by 6,500 divided by 50, here you are getting 750 shares. But when it comes to 60, 37 divided by 60 becomes 625 shares. Means what? I need minimum 37,500 rupees amount. If your issue price is 50, then you have to issue 750 equity shares. But if your issue price is 60, then you have to issue 625 shares. Enough. Whatever amount you want, you will get. But here problem comes, how much amount to be transferred to CRR? So amount to be transferred to CRR, calculate. How much capital you need? Replacement 65 minus minus, I'm not taking this part, students, I'm taking this part. Means here I have issued shares at premium na. So in the denominator, what amount I have taken? 60. So how many shares I am going to issue? 625 shares. So by issuing 625 shares, how much capital is replaced? How much capital is replaced? Tell me. 625 shares into 50. Capital replaced is 31,250 only. Means 33,750 rupees you have to create CRR. Yes or no, students? Just go through the problem once. But here in this problem, they have taken only 50. Why? Because the face value is 50. At the same time, issue price is also 50. In exam, now what example I have taken? Issue price is 60. Now you can understand. 50 here, but whereas 60 here. Why I have taken 60? I need 37,500 rupees to receive this. How many shares I have to issue? Means my issue price of share is 60. So I have to issue only 625. By issuing 625 shares, I will get 37,500, whatever I want. But the next problem comes, how much amount is transferred to CRR? For that, first take face value of redeemable preference shares 6. By issuing fresh shares, how much of face value of capital you are able to replace? Means 625 shares issued, face value 50, total 31,250. Remaining amount 33,750 I have to transfer to CRR. That's it, friends. So these are the various adjustments which you have to take care. Observe carefully. Is it clear, friends? So all the best for your exams.